Hello guys, welcome to the Trading Parrot. It's Sunday morning and in today's video I'm going to cover this potential breakout from this bull flag on the 4 hour. This is a setup that I already featured in my video yesterday. I'm going to encourage you to watch that video, although it's 36 minutes. Just focus on the part of the video where I talk about the actual setup. I won't go into all the details. I'm just give you a summary and the current progress. Some new signals from MACD have been confirmed today as well, and I also want to talk about this potential bullish cross that is about to confirm on the daily time frame. The last time it triggered, Bitcoin went up 160%. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. Thanks so much. Yesterday, guys, we made it over 300 likes, indeed 350. Let's hope one day we can get into those 400 likes. That will really change this channel forever. And yes, guys, we are very close to witnessing a bull cross of the 50 moving average on the daily above the 200. These are two moving averages that are monitored extensively by traders, not just on Bitcoin, but in many multiple assets. They're very popular, and I'm expecting that once the signal is confirmed, many influencers are gonna get notified and they're gonna start covering the event and trying to get people to get excited about this. It is exciting in a way, but I treat moving average the way they are, a lagging indicator. Sometimes they confirm the beginning of something, like past year, end of October, precisely where we are. We got a bull cross, and right after that, 160% to the upside, which is great. That follow a bear cross 11th of September. This year, we had the bear cross on the 10th of August, roughly 1 month before, but the bull cross is pretty much happening at the same time, 2 days, 3 days difference. Bull crosses sometimes can signal a local top. I showed you in the video yesterday an example of that. And don't get me wrong, this is bullish, but I don't take for granted bullish crosses. In many situations, they can just be a fake out. They cannot be used by itself. So I tend not to trust them and use them just as some background noise that could add up to an already strong thesis coming from many other sources showing strong confluence. And yes, we do have some things that are very strong. For example, the ETFs that continue to accumulate, starting to have some sort of parabolic move, very similar to March in 2024. And we do also have in our favor the big whales that are taking advantage of this season for Bitcoin to do what they typically do in a halving year post the event from around July into the end of the year. What they do is to accumulate, and they're not doing anything different from that. But even if they do, sometimes Bitcoin can have corrections. Like you can see in here, they accumulate and there's still corrections. That is just the nature of Bitcoin. But in our favor, having them accumulating can provide some sort of cushion. But don't be silly. If there's a black swan event, there can be a big spike from them. They are not stupid either. And on the open interest we covered yesterday, we talked about going above the 21 billion mark. That was our goal for this whole 8-month period, and we did it, but we now kind of slip back in the third layer in here. And yesterday we talked about this level hopefully becoming somewhere in here, support for this ugly looking potential fake out. And I say that if we stay for very little time in here within this squeeze, we could have further opportunities to break above it and to prove that we are going to maybe hold there. And why do we care about being above 21 billion? Because when price enters a new range, the open interest also enters a new range. Like in here, we exit this range, and then in here, we enter the range of 2024. The things that are concerning me are not just coming below that should be fine, but I do not like this pattern in here, which is an ascending wedge, bearish for the open interest, indicating that there can be a flash of it pretty big. Not all ascending wedges end up hitting the bottom, and just so you know, hitting the bottom at 15 billion mark can mean a full flash of the market going possibly into 46, 48k. I don't like that idea, I just keep it in mind in case we break below this trend line. I will let you know. And spot has done nothing apart from selling since the 26th of September, and today we are seeing just a small wick to the upside, insignificant to say anything, but I continue to keep and stay updated with spot because we really need to see a shift when it comes to the CVDs on spot. Long-term holders are also having this small wick to the upside in there, which is good, at least not to see a vertical sell like we saw on the 7th of October, causing a regression of around 20 to 30% of all that they accumulated since July. The megaphone pattern looking pretty good, still worth making a poster and hanging on my wall. Today is Sunday and we continue to hear our prayers about the RSI holding the white line of support in here before the close of tonight, which is what we need to increase the chances for continuation to the upside. Bear in mind that this yellow line that looks just like a line doing nothing in there is probably the most important yellow line across all my charts in this bull market. This is the weekly time frame, and the full bull market up until June of 2024 was constantly holding that line. We lost that line in June, and since then we entered this area in here, which is very close to the green line at an RSI of 40, and that is the last line in the sand that once we penetrate, we can never stay in a bull market for much longer. And we have so far held at lows of 45, 44, forming a double bottom, finally having the breakout. So we seem to be running away from the chances of going sub 40s, sub 41, I think I said in the previous video. But now if we come back and hit that yellow line, that could be strong resistance. It was already somehow resistance in July, and if we come back and hit that line, what we want to happen is that all this rally that we have from 44 into potentially 64 RSI, that doesn't become a dead cat bounce. Let's go back into the previous bull market in 2021. We had a bounce into that resistance, similar, not the same, because the support in that market was this line and we never even made it to touch that line. We touched already this one descending. But you get the point. In 2021 we broke support, we found support somewhere in here, and we created a channel to the downside. In here we lost this support after the first peak, and we need to do some heroic effort right now to go back into the high levels of RSI, breaking above the yellow trend line to really see prices above 100k and anything like that. If we just failed and hit the 64 and that was it, guys, that will put Bitcoin at a price of 75.8. So that's why it's so important that we overcome this yellow line and we continue higher, hopefully being held by the white line, which provides further reassurance. When it comes to liquidity pools at the moment in the market, you can see that there is a big gap to the upside and to the downside, and the price keeps just flickering around 67k, just grabbing the low liquidity and the upper liquidity. I guess if we put a volume profile in here, we're just ranging. To get to the juicy 70k, we need to move 2.5k, and to get to this level, 2.4. So it's roughly $100 difference to take either. And we are on a weekend, and my preference is that we take care of business, meaning let's take the lower end at 64.7 very quickly within the weekend, and let's use the insurance coming from CME gap form thanks to that. Going to that 64, something roughly around here, we'll put a lower low there, sure, but if we do it on Sunday on a very sharp move down and then we recover thanks to the CME gap form, we could be in the same 67k by Monday or Tuesday if we get lucky, and that will just look again as the same price action that we are having in here, up, down, up, down, up, down, and nothing really happened. But the advantage of doing that is then there is nothing there left to take in the mid 60s, and then we can start looking a lot more confident to go for the 70k. If we go for the 70k within the weekend, then we leave an ugly lower gap and we have to go back in the middle of the week, sub 70s once again. It's not the same story, right? And again, 64.8, 64.7 is yellow in here, but the lower 60s at 61 to 60s has more liquidity, and going sub 60s starting from 57k is a party of liquidity as you will expect, but nothing compared to what we have a lot closer to the price if we hit the 70k. So that's why I want to cover the potential for this bull flag to break out, and I gave all the details of how it can fail and everything in the video yesterday. I encourage you to watch it. The target is 74.6 if it plays out. And remember that I think that this is rolling over, and before we break out from this bull flag, price needs to convince me that this is not rolling over. At the moment we have a lower high in here, and if like I say yesterday, if we break from the support provided by this trend line in here and we start putting closes below the 64.5k, then I think the bull flag is too stretched. Yes, there can be a very quick liquidity hunt in there, but it needs to be extremely quick like this one there. But closes in here confirm that this is rolling over and it's just going to go potentially for that 61k instead. But we have to pay attention to this because the reward is huge. It is the quickest opportunity that we have to hit the big price at the top at the moment. But it can very quickly get spoiled and we will have to wait further. And guys, one thing that can spoil it is the confirmation I also have from the MACD. Having closed yesterday, we say that it was going to be very low likely. We needed the price to go above 70k to prevent it, and that didn't happen, of course. So we have one of those ugly MACDs, and if you notice, we have an ascending channel in here. So watch my video from yesterday, is back with alpha, and I explain why I am expecting a smaller drawdown compared to the drawdowns of typically 20s and over 20% that we have had in each and every top of the past 8 months. On the daily time frame, we are doing what we need to do. So this is supporting the idea of the 4-hour being an early signal for hitting the highs. We have a bull flag in here. We have found support in this area, and we are doing more or less what I was hoping to do, which is to have a fight in this range and to continue causing brain damage to the shorts, not allowing them to sleep during this period because they have their liquidations here and they are continuously thinking to add more to their shorts, making them even harder to sleep, because what they really want is that we break this line and we start coming down, and then they cash out that another big price like they have already done each and every time in here. But this time they are sweating slightly more because we already broke that resistance and we are still battling. They're counting victory that we are below the line, but they are starting to think why the price is not collapsing in a similar fashion than we have there, and that is causing them doubts. You know, they are still holding the beer, but their hands are shaking and they're starting to drop in the floor, and people are approaching them and asking them, are you all right? And another source for them to continue thinking about the mothers is that we have hit the bottom of this trend line. This is the net longs versus shorts delta. This means that for these last 8 months, we are in the range where shorts are extremely overextended. Indeed, we went below the trend line at some point, similar to when we hit 49k, if I remember by heart. Nope, that was 53k. But we have done a breakout in here. That breakout typically is telling us that there should be some upside coming with further confirmation. Nothing is guaranteed in trading, but we are seeing shorts stepping back. That means that there has been excessive amount of shorts and some of them have been taken out. And that is a bullish signal, because once some of them get taken out, there's usually more of them that are taken out. And you can see the story repeats in here. A big move of shorts taken taken out signifies that many more are taken out until the ratio goes back into too many longs. And the same happens in here and in there and in here, and you get the point. So at the moment, some are being a little bit sticky, pushing this to come back into the trend line, possibly, but that's not what history says around these areas, where aggressively you start coming back up into too many longs being in control. So I will continue to keep informed on this one, as well as the rolling over, hopefully that it stops. There are some orders in here for 640 at the low 69s. Remember that we have a huge selling wall. This morning we woke up with 117 billion. Nothing has changed much. And this peaked at 120. I think I read 121 at some point, but then it refreshed. And the fair value gaps are as spread away as the liquidity pools that we can see in the scalping chart. 2.5k to the upside, 2.5k to the downside, and the fair value gaps I think is more or less the same, 2.4 and 3k to the upside. So this confirms as well the fact that the price will do something a lot more violent this week. So if you have tight stop losses, you're screwed pretty much, because either the price is gonna hit that and then make a huge move down as a consequence of liquidating the largest pool that we have had on the upside in the past 8 months, starting with that. But if we don't go there, just going to the 2.4 is gonna cause as well that the long-term holders realize price that is currently sitting at 63k is gonna cause a lot of paranoia from the short-term holders that the price is coming too close to their average, to their break-even, and potentially they can also start dumping a bit further, taking the price into 61. So there is certainly a high likelihood for volatility, which is supported by the last 2 weeks going into the election, the high levels of open interest, the spot still not picking up. Guys, today is Sunday, and if you really don't want to spend your whole Sunday getting a better exchange to trade with leverage anywhere in the world, look no further than Bluffing. I have 2 accounts for myself, which I managed to open in 5 minutes. And the reason I managed to get 2 separate accounts funded trading with leverage is because they don't ask for KYC. And I got you a beautiful bonus of 10k if you use the link in the description to get those accounts, and the lowest fees to trades as well. If you already have an exchange and you're happy trading with it, no worries, I have the best products in my collection in front of the screen. This all allow me to make more money, whether trading manually or trading with bots. You have the best data cherry picked. I don't pay any of these subscriptions. They offer them for free to me to use it, to feature it in my channel. But if I had to pay it, I would, because I did already for a long time, and I'm lucky now I don't have to pay it, but you see me, I use it. So it's good stuff, and it's not stuff that I'm convincing you is good, but I actually don't like it. Like trading different has become a strong part of my trading, together with high block capital. Lux Algo's smart money concept makes it so easy to see all the elements from order blocks, fair value gaps, breaks of structure are extremely easy to visualize, and they are very accurate as well. You get discounts, bonuses, lowered fees, everything. Have a look there. Anything that you pick here is definitely supporting the channel to continue making videos on a weekend, making 3 videos a week. I'll see you later. Enjoy your Sunday. Bye bye.